Are you leaving money on the table by not employing your spouse in your business? Maybe you're just worried that putting your spouse on payroll just leads to more headaches and more taxes to the government. What if I told you there are some cases where putting your spouse on payroll will save you thousands and can set up retirement quicker than ever? So, if you want to maximize retirement or turn family medical bills into tax savings, stick around as we break it down. Hey there, tax warriors. Welcome to JDB Tax. I'm Brian Eustache, enrolled agent and tax strategist, but I call myself a taxtician, a tax tactician leveraging the tax code to the fullest extent. With this segment of Tax Tactics, we're tackling a topic that's been in the middle of business and marriage for years: spouses on payroll. I always think people are wrong when they say a spouse doesn't work for their business. A husband or wife is a very important part of the business, without question. They should be helping make big decisions for the company by being on the board of advisors or board of directors that gives advice or makes decisions. In that case, a spouse will always be helping out with the business. So it's fair they get paid if it helps with tax planning. Not only does it open the door to turning dinner dates into business meals, but it unlocks a bunch of tax saving strategies. But today, we're going to concentrate on the big two: retirement and medical expenses. Also, if you'd like to see more tax content like this, hit the like and comment down below. Now, if a business owner and their spouse want to save a lot of money for when they get older and maximize retirement, they might be able to use something called a solo 401k. To do this, both the business owner and their spouse need to get paid by the business. This way, they can put as much money as possible into their 401k savings. Especially with the employer match options available, they can have great flexibility retirement planning. In 2024, the primary business owner and their spouse can each contribute up to $23,000 or $30,500 if 50 or older into a 401k. The business is allowed to take a tax deduction for the W-2 payout. Neither spouse has to claim the contribution as income on their 1040. That's if it's a traditional contribution and not to a Roth. Okay, to understand a 401k contribution rule better, you want to think of yourself as two people: an employer of yourself and an employee also of yourself and your spouse in this example. There is an overall 69,000 contribution limit in 2024 for each. Your contributions are subject to additional limits in each role. As the employee, you can contribute up to that 23,000 in 2024, or 100% of your compensation, whichever is less. Those 50 or older get to contribute an additional $7,500. As the employer, you can make an additional profit sharing contribution of up to 25% of your compensation or net self-employment income, which is your net profit less half your self-employment tax and the plan contributions you made for yourself. Yes, there's some FICA or payroll tax due on the W-2 amount for each spouse in order to fund the 401k. But the ultimate tax benefit is significant due to the time value of money and building a tax-deferred retirement account. Usually, it's custom to gross up the payroll amount on the spouse to cover the FICA taxes, then zero out the rest with the contribution to the 401k. Let me illustrate it. If under 50 years old, the payroll amount would be approximately $24,905. After paying FICA, the remainder is equivalent to the $23,000 max contribution, aka zeroing it out. If your company does the 25% profit sharing contribution, that's another $6,226.25 going into your retirement account. The business gets to deduct approximately $31,131.25 and no taxes paid currently for the $23,000, and $29,226.25 will grow in your 401k. You can do this for you and your spouse and accelerate retirement savings while creating deductions for your business as well. Bonus note, if you're a business owner where you and your spouse can afford to pay a little more in taxes now, they can get even more creative. They can fund a Roth 401k and create tax-free accounts rather than just deferring taxes until the future. But let's get into that other great reason for adding a spouse to payroll, potentially writing off more medical expenses. Let's face it, some taxpayers aren't itemizing deductions. So writing off medical expenses isn't happening. Or they are, but deductions is for expenses exceeding 7.5% of your adjusted gross income for the year. So the way it is, there's some medical expenses being paid with nothing to save. So essentially, if your family has a lot of medical costs, put your spouse on the payroll. It may allow you to utilize the health reimbursement agreement, an HRA. However, keep in mind that you would have to do it through a sister management company, typically a sole proprietorship, because it's important to note that an HRA strategy is impossible for a business owner to use with their S corporation without the use of a sole prop. The reason being is the greater than 2% shareholder rules that prevent a business owner or their spouse from deducting certain fringe benefits for themselves. This includes the HRA. However, the loophole/strategy is to create a support or management company that would hire the spouse for services provided to the main company. And under this employment relationship, provide for an HRA. On the face of it, the HRA may sound complicated or expensive, but it's actually simple and affordable. It is self-administered without the need for an insurance company or bank's involvement. The beauty of an HRA plan is being provided through an employment arrangement that is, the payroll could be minimal, or it could be used in combination with a larger payroll amount and a 401k contribution. To summarize, the 401k contribution and the HRA are the two big reasons I think business owners should consider having non-working spouses on payroll. If it sounds confusing, consult a tax professional. That's why JDB Tax Strategy helps business owners legally save money on taxes without fear of the IRS by leveraging the tax code to the fullest extent. After booking a consultation call with us at jdbtax.com, we'll build a personalized battle plan to minimize your tax burden, maximize your wealth. So subscribe, hit that notification bell, click all to join me on this epic quest to conquer taxes and claim your financial throne. I post tax tactics every Tuesday and Thursday. See you next time, tax warriors.